What happened really is that, yes, it was about the tax on cars and fuel, but it was just a tipping point of something much bigger. And essentially everything that happened during the Macron's government since the beginning, but it's not about Macron, it's about 40 years of destruction of the public domain, the banking sector taking over the country, and people are feeling it not just in their wallets, but they are feeling it in their neighborhoods, their grandmother, their sisters, their baker. Everyone is talking about it since many years. What really triggered all of this is, first of all, Macron's rhetoric, because he has really a way of talking which is extremely aggressive towards people who are working, who are fed up with having to cross the red line on the bank account every second month and not being able to pay for simple things like for their children for Christmas. But I think we are getting to a laser effect, which is everything is coming together in a single point. And it's not about right wing with antifas and whatever, getting into violent games. It's much bigger. Like, I've seen people throwing rocks at policemen. You would never expect this kind of people to do this in their life. It's because they are really getting insulted on a daily basis for what they're doing. And now I guess they have crossed the line, and this line will never get back. Never.
Yeah, I mean, you were just telling me about some of your living situations. We can just move over here to the curb.
Welcome back, guys, to Wolfpack Cryptos and MMGinvest, where we talk about Bitcoin, cryptos, gold, silver, and the largest wealth transfer in human history and how to be on the right side of that. I will be covering the breakup of the Eurozone, and I will talk about France a little more. But the French Revolution, and it is a revolution, it's not just a splash in the pan. And if it is for now, it's going to come back. But we could see that Macron is losing favor in the polls. He has approval rating less than 20%. And he did come up with a gas tax on the backs of the global warming carbon tax thing, which is just another scheme to rob the sheep of more of their money through taxes to pay for all the promises that politicians made and cannot make promises and cannot afford. So Marie Le Pen, she is gaining favor, and she's the nationalist movement in France, right? She almost won in 2016, or she put up a good fight during the French elections, and she's gaining more favor, and you can see nationalism really gaining in Europe. And what this means is that they want out of the European Union, right? That the control structure, the unelected bureaucrats from Brussels and whatnot, and people call them the globalists. And you can see that there's a national uprising and whatnot. Now, this tax was on the gasoline and was on not the urban dwellers, but the people outside the cities. And they were the ones who came into the city and started protesting. But what was interesting was that Antifa and the people living in the cities, they were protesting together, and they were rioting together, this is the first time we're seeing unity among these political extremist groups, you could say, right? But what it really is just civil unrest. Everyone's poor and broke in France. And the same with the rest of Europe and the United States. The United States is doing a little bit better, but that will change in the near future. Now, we could also see that the Yellow Vest protests and other nationalist protests and unrest is still happening across Europe. And Britain is still trying to get the Brexit agreement and trying to break away from the European Union. As you can see here in this video. And this is going to continue. This is just the beginning. I mean, you could say that this started a little bit ago, but it's been brewing for many, many years. People's livelihood it's the cost of living is going up in Europe. All the social welfare entitlement programs. Europe also has a baby boomer population like the US, and it's the ECB, the Central Bank of Europe, cannot fund all of this, which is really just Germany. So let's take a look at the European markets. So here's the global markets. You see the United Kingdom is down 17%, almost 18% on the year. And that's the entire index there almost. And we can see that France, the Netherlands, Switzerland, they're not doing that great. It's more red than green. Along with China and the rest of the world, pretty much third world. I mean, Canada has been hit massively recently due to trade tensions with China and the US. So looking at the indexes that track these economies and the stocks, the largest companies and corporations within Europe, you can see that this is a weekly chart, by the way, that recently they've really dropped in the past 6 months, in the past year, along with the US markets. But they have suffered much greater than the US markets. Here's the FTSE 100, top 100 companies. It's on support right now, but you could see that it's had a decent drop from almost 8,000 all the way down to 6,800. It's going to get a dead cat bounce, but eventually it's going to break this giant support area below 6,800. You can safely say once the price breaks below 6,600, watch out below. The United Kingdom is in a full-blown recession. Or no, what was that? Well, the upper left chart right here, that's what I was just talking about. Here's the Euro top 100. So these are the top 100 companies in the entire Eurozone. And you can see it's already sitting on support here at 2,600. And this is also a weekly chart. Each candlestick's a week. Soon that will break down. Of course, it'll probably get a little bounce and may trade sideways for another few months, 6 months, maybe even a year. But eventually, the entire whole of Europe will fall into another recession. Here's the this is the French index right here. You can see that it never made all-time highs this in the past few years, like the rest of the countries or the major countries in Europe, not including Spain or Italy or anything like that. Those are looking just as bad. But the all-time high for the French was back in 1999-2000, which actually makes more sense than anything. They have less of a bubble, and they have extremely high entitlement programs and taxes. Matter of fact, they're the second highest tax country in Europe right now. The highest taxed is, I think, Belgium. I would say the United States is up there, but if you're smart and you own a business, or the 500 Fortune companies, they don't pay that many taxes. One of the largest tax havens is the U.S., believe it or not. But you need to be lawyered up and have accountants finding the loopholes for you. I'll digress on that. So the French market, it's definitely taken a plunge in the past month or two. Just with the U.S. stock market and the U.K. and the German, right? The German's right here to the bottom right, the DAX. And that has also suffered greatly in the past few months. And I've said if you go to my specials playlist on YouTube, I called this 2 months ago, or a month ago, over a month ago, and I made a very good video on it. And it's 38 minutes long, and I talk about how the top is in for all of the stock markets across the entire world, not just the US. That's what I believe. I can change my mind, but I'm pretty certain the top is in and the end is near. Don't want to scare you, but that's what it's looking like. So I was looking at a few articles, interesting articles on Zero Hedge. We can see that the ECB is very hawkish for some reason, which is the ECB is the central bank of Europe, just like the Federal Reserve is the central bank of the United States. And if they're going to stop buying assets, right, they're buying debt and malinvestments from companies and other banks that are pretty much zombie banks, that are pretty much bankrupt. If they stop doing that, it's going to worsen the economy across Europe. So you're going to see these countries break off. And you're going to see civil unrest. And this is just the tip of the iceberg. It's going to get worse across Europe. If Draghi, if they stop printing money and buying assets. But they're not. They're just saying they are. I don't know why. It's not going to help their markets in Europe. I think they're at the point where the markets are afraid that the European Central Bank's never going to be able to pay back all their balance sheet. They're not going to be able to unwind it, and it'll blow up, which will blow up all the banks in Europe. Same situation with the United States. And in my next video, I will talk about the Federal Reserve, because it did just pretty much go bankrupt. It was in the headlines today. You can see here, Macron faces Thursday no confidence vote as protesters reject economic crumbs. Now, Macron did say that he was going to halt the gas tax for 6 months and give $100 more a month for all the welfare recipients in France, which is like over 60% of the population. And it's not enough. I think people there have had enough, pretty much. They can't feed their families. I mean, you guys heard earlier in this video, right? That was a actual citizen of France, and he was talking about the situation there from the ground. You're not hearing it from, mainstream media or anything, because it's always skewed or lies. So, how is this going to play out for Bitcoin? Bitcoin right now is in a bear market, right? And it's coming towards the end of the bear market. Now, that can mean that Bitcoin could fall to 1,300, or it could, the bottom's very near at 2,800 support. You don't know until after the fact. But within the next 6 months to a year, I'm pretty confident that the bear market, the bottom of the bear market will be in. And the reason I believe that is because of the breakup of Europe. Now, once these banks start going under, companies, people start losing their jobs, it's economic Armageddon. The governments are going to go bankrupt. And the people will have no choice but to use an alternative to the fiat currencies, which will be hyperinflating eventually, like in Venezuela. And even if we don't get hyperinflation, we get like just a depression, the taxes they will have to keep raising taxes. If they don't, then the government will fall apart completely, which is fine. And it's actually good for Europe. This is what needs to happen. But during all this chaos and turmoil, the only two investments in the world that are viewed as safe haven is Bitcoin and gold. and silver. And the reason Bitcoin is because you could actually transfer your assets and your wealth cross borders, and they can't stop you. With metals, they could stop you, but with Bitcoin, they cannot. So we saw this in the beginning of 2017, which actually I think was one of the catalysts, besides the halvening and other and the Bitcoin fork and the upgrades and whatnot. But one of the major catalysts were capital flight out of China in the beginning of 2017. And we're going to see the same thing in Europe. And then eventually the United States. So that's the bullish argument or theory for Bitcoin. The other one is obviously metals, because the only thing that's money is metals. Everything else is credit. Now, I will make another video tomorrow or the day after talking about the Federal Reserve, banknotes, dollars, and how the Fed has pretty much just gone bust, how it's insolvent. And I posted that in the newsroom of Wolfpack Cryptos. Fed net worth turns negative following record $66 billion in paper losses. And this is a big deal, guys. This is really big. And I will go in depth about that. Now, if you guys are new to this channel and you guys found this informative, if you're interested in cryptos, interested in gold, silver, and economics, check out the links below. We have free chat rooms. We have a free newsroom where I share charts on stock markets, metals, Bitcoin. There's a bunch of rooms in here, actually. MMGinvest. There's another YouTube channel, another free chat room where talk about economics and metals and whatnot. And this is all free. Alright, guys. If you guys found this video informative, thumbs up. Please share it on Twitter, Facebook, wherever. And I really appreciate it. Leave your comments below and I will answer them below this video. And until next time.